Alright, I'm back again, everyone. So today I'm going to talk about a stock. What stock am I going to try to add to my portfolio today? Well, it's UPS. Should I add UPS stock to my portfolio? Alright, let's get into this video. Now, do I think UPS is going to go anywhere? No. I think they're around for a while. And the analysts are saying to purchase this stock. Should I purchase this stock based off the analyst? No. Always do your own due diligence and always do your own research. Currently, I am looking at them. So the yearly is negative 10%. The 3 years is negative 34%. And the 5 years is a positive 12 or 13%. So based off this 5-year thing, it might be okay to purchase. But I want to see what's going on. If there's a reason why they are dropping so much. So let's look at the trading real quick. And let's see the volumes. Summary, settlement, finance analyst earning. Where is it? The company. So the company right now that's interesting. There's people buying up the stock. Now this Caesar person sold, $3.92 million worth. But it's interesting to see people. Oh, he's the president of United States and UPS airline. So yeah, he sold it, but I'm not worried about it because that's where he gets some of his benefit. But these other two, Johnson Williams, they purchased some. And that's very interesting to say. I have people purchasing it. Now, if you don't know what the United Parcel Service or UPS is, you haven't been around. It's how you get your mail. So they're not going to go away. They employ over 500,000 people in the United States, and they deal with freight and logistics services. Now, let's see what's going on. Why did it drop, and why is it dropping? So, first thing I'm going to do is gross margin, 79.74%. Okay, that kind of makes sense. They have a very good gross margin. What does not make sense is they have a 7.37% net profit. Now, I like to see the net profit a little bit higher. I like it to see around above 10. Let's see what's going on with the trend with them. So they're making more money throughout the years until 2023 is they lost money in the profit margin. And they have a major loss this year. So due to that, that's kind of making me concerned of why is this company have a major loss? Even though in revenue, because they've been charging a lot for their services still. But why is their revenue go down? Because it's not like FedEx took over, $10 billion worth of work from them. So did people start buying less things? So this is a good indication to look at the overall market, because if less people buy things, that means less people will ship. Did Amazon shipping affect this? Did Amazon take away their deals where they're not using UPS anymore? So with Amazon shipping its own item and other companies starting to ship their own items, is it affecting UPS? And looking at the numbers, yes, because over the last year or two, Amazon has been really pushing their own delivery system. If you didn't know that. So since Amazon pushed very on their own delivery system, I believe it affect their profit here. So they're gonna have a dip. And the issue with Amazon and everyone shipping their own method is now I can't trust UPS to be stable and grow next year, because the only other thing I can do is go to quarterly and see how they've been performing each quarter now. And each quarter, besides September 2024, where they had a 5.62% growth. So maybe on the fourth quarter this year, it will have a growth. It'd be a good opportunity to look at, but right now, they are looking like they're running in a deficit. And with Elon and his efficiency going on, maybe the UPS will take this opportunity to reorganize their system. Now, the one thing I do like about UPS is they pay a high dividend. They pay a 4.84% dividend yield, which is a very good dividend percentage. So, if you are looking for a dividend that pays a high dividend, this would be a good stock and a good one to hold for 10 years. Now, the issue is when to buy into this stock, because with other companies coming out, I am unsure how are they gonna recover and gain some more market share. Because you can see right here, according to FedEx, their earning is better than FedEx. So what are they gonna do about it? Because we are having, or they are having issue with their earnings. Their net income and revenue has been looking pretty stable according to this chart, but they haven't been doing so hot. And now we have to see what investors are possibly rebalancing the portfolio due to their not doing so well. So who is leaving and selling the company? Popular searches. So to recap this, I am looking at this portfolio. And then if I hold on to 5 years, it does have a good chance to regrow 12.9%. That is in the margin I would be looking for. Now, these 2 years, it makes sense because they took a hit, a very bad hit. But the analysts are saying it should be $149. Now, we can look into the company and see who is investing in it. So if you look at the company and see if BlackRock or someone is leaving their portfolio, then you're gonna have to worry about it. But right now, let's see what's going on with UPS. What news article is going on with UPS? And the top one I found today is UPS will pay $4.5 million in fines with the settlement. That's not good. I don't want to purchase. UPS orders to pay $45 million for overvaluing freight business. Okay, so they're losing money because they overvalue. That's $45 million. Same article. UPS layoff 404 in Denver warehouse amidst automation push. So it's good that they're doing automation push, but it's bad that they're laying off 404 people. So you have to take that as a balance. Wendy names UPS executive as new CFO. Don't care about that. Think UPS is expensive. The chart might change your mind. So based on this analysis, I don't think it should be added to my portfolio right now, because it does pass my finance portion, because it does has a good growth margin, and I think with the returns from maybe 2025, by the end of it, it's going to be back in the positive on the $1 trillion in profit, possibly. So it should be balancing out. And based off the cash flow As long as they're not putting themselves in more debt, it should be okay. So, is UPS worth buying right now? No. Is UPS worth buying in the future? I think so. But I'm going to have to look at it because right now they're not doing so good. They have a bunch of bad news on them. They're automating their their Amazon, or not their warehouses, which if they're automating it, it's going to save so much money on labor. So the operation expense should go down. With the operation expense go down, I would see a greater portion going into margin. So with the news of the operation expenses, in my opinion, that's going to go down. With the good dividend yield and with the 5 year 13% gain, I do think it is worth buying. But right now, I think they're going to still go down. So personally, right now, it's not a time for me to buy until I start seeing a more positive number to add to my portfolio. Yes, I can buy this and hold on to it for 5 years and get a good return, but I think it's going to drop a little bit more, and due to some of this news going out right now. So due to that, the news coming out is not worth buying at the moment until everything clears up and settle out. I don't want to purchase this stock right now, and in 2 months it plummets because of those news. Even though it has a good dividend yield, if it drops even more, then it's going to take me longer to recover. So that is my opinion on UPS. I think you should invest into UPS if you're willing to wait 10 years and you'll get a return. I don't think it's going to have enough growth in the next year for me to invest in it. Maybe by the end of next year, it will have enough growth opportunity for me. But right now, I think it's going to be dropping next year, and we're going to see it go down a little more. It might not, it might, but I'm going to keep an eye on it. Maybe if it goes to 120, I'll purchase it. But right now, I see it as bearish and it's going to keep dropping due to the bad news and due to the profit margin not being as high as it was in 2023. Because the valuation of $90 billion in revenue compared to $100 billion, that's $10 billion. And your company is not worth as much as it was in 2022, as it was in, 2023 is not worth as much as it's 2022 based off of the revenue. So based off the revenue, you should have a drop in the 2022 range until now because of the finances. And it matches what I see here. It also matches what I see here. Due to the revenue, the company is not worth as much. But it looks like, based off the finance on the latest quarter, that it might be recovering and it might be worth purchasing mid of next year for a good growth return, a good dividend yield, and a decent finance. This one has all three, but right now it looks like it's a little bit too early to buy based off of the evaluation I gave. So thanks for watching. Please like and subscribe to my video, and let me know down below if you can buy UPS. I'm gonna hold off. It looks like it's gonna drop a little more personally.